Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting with the lab today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. How we doing in YouTube? Thanks, Camo, and thanks, everybody. Good morning. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis. It's also based on structured trades that are available in the Discord Trader Lab community, as well as a library of webinars on the process you're going to see here every day. And this is about the business of trading, career building, and attempting to create sustainability in this business. And most retail traders don't understand the business they're trying to be in. So my objective here is to help you understand the business and potentially help you better define what you're trying to accomplish and share with you tools that might work to help you achieve that objective. Now, the thing about trading that I think really needs to be considered by all developing traders is to understand the psychological impediments, and that this is not an indicator and time frame based business. It is really much more based on the auction, or how the participants try to figure out what's too high, what's too low, and what's fair. It's shopping. So if you understand how shopping works, you understand trading. Now, of course, for us, since we're in an environment where the shopping is taking place all the time and price changes all the time, that we experience that event in rotations. Now, rotations happen all the time, and all time frames are fractals. So if we're in an environment that's constantly rotating in a valuation discovery process, we can take that concept and maybe extrapolate it into multiple time frames. So higher time frames going down to micro time frames, if you will, or fractals for execution. This is what the Trader Lab is about. And of course, like everything, you have to build out a plan that fits your psychology and deal with the psychological impediments, which are substantial. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. I'm going to give you a few statistics, talk to you about higher time frame and what sets today up. You don't want to miss this, and you want to review these streams if you find this information helpful. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get there, we'll talk. By the way, if you're interested in Trader Lab, this is what the 60 PDFs of structured trades look like. These are broad strokes. They'll give you ideas, and then you need to reverse engineer them and fit the concepts into the rotations or time frames that you want to trade. And the thing is, wanting to trade and being able to trade, there's a bit of a gap with that. And also, one trader's rotation, another trader might just be trading from there to there, whereas maybe the edge is the shorts and then the long, right? So what is the differential, and where do you identify your edge? Great question, and we explore that in the Trader Lab, and every trader has to find their edge, and it's based on statistics, not on how you feel or if there's a full moon. Now, if you want to visit the Trader Lab and take advantage of all the other education that's available, you need to verify your Discord ID, and the reason for this is we want to help Bookmap subscribers have the best experience. So if you're a Bookmap subscriber, you need to verify, and this is the email that's attached to your license key. If you're a TOS user who uses TOS Bookmap, you need to register It's free, and the same if you're not a Bookmap subscriber and you want to attend all the education that's available in the Bookmap server, not to mention the Trader Lab community. So this is, oh, that's nice. Huh. We have it in languages just so you don't miss out. So let's now get into the higher time frame. Now, look at this thing. Oh my goodness. I'm getting delirious. Where's the Dramamine? Let's talk about the higher time frame. And I like to do this because most day traders get hung up on micro. Well, that's all fine for triggering an intraday fractal trading. But overall, we want to try, and again, subject to trade plan, to align with the dominant side, even though intraday longs will get thrown under the bus on counter rotations. But if we think the trend is up, maybe, and I'll explain why, then might you only want to be taking longs today? Or are you a trader who trades counter trend and trend, and the market can become two-sided, so basically it's outside in, outside in? What's your trade plan? This is the answer that must exist before you put your first trade on. If you don't have the answer for you that has a statistical edge, you are gambling. Gamblers don't stay in the business, but they have a great time. And I always suggest if you're going to gamble, go to casino, get the coupon to the buffet, and maybe some cocktails. What is this? This orange line is the highest volume from, I think, April last year. Not this year, last year. And it was 55.3375. You'll notice this is an auction. What this is a consolidation. And the way the market works is the market goes down to go up. The market goes up. And then this, a huge squeeze to go down. Who knows, right? Squeezes are part of the thrill. That's life in the fast lane. We got to get over it. But when you have a tail like this, and the highest volume for this day was up here, and we closed down here, the language of the market says, I'm not paying that. Are you nuts? All right. Now, in this consolidation, the highest volume is here, the orange line. Now, what does this all mean? Very quickly. Volume represents retail. When you go to the store and you buy your tuna, and it's $1 a can, and that's the retail price, and people are buying it tuna, that means there's agreement. So the sellers sell it for $1, you buy it for $1, everybody's thrilled. So that's retail price. But if they put it on sale, like here, and the perception is that this is a heck of a deal, then the buyers throw 10 of them in the cart, and we come back to the retail price. If the price gets too high, I'm not paying that, we come back to the retail price. Now this, I don't know if there was that part I can't tell you. Now down here was the retail price from April last year. Once we break below it, then we're rejecting that and now that, and that sets up all of this. Now down in this consolidation, this is the retail price. And then we had the 90-day tariff pause scenario, which squeezes out the buy stops above here. And I come back to this retail price, and I didn't get into this gap or get here. But we know their stop's going to be here. Market goes up to go down. Market goes down to go up. Market goes up to go down. Market goes down to go up. Market goes up to go down. And where were we trying to go? Here, retail price. If it's too low, and there's no precision in this, market goes up, actually goes down to go up, goes up. Now, this is the retail price in this consolidation. We gap, which leaves a gap, and now we reject this. We're out here, and now the market goes up, picks the stops off here, then goes down. The market goes down, does not get into the gap, and then squeezes. We go up. Where's my stops? There and there. I'm into this now. What does it say? Look at the language. Gap, too low, going up. This is yesterday's RTH. What happened? Sellers and then the buyers came for it. In this consolidation is the new retail price, the orange line, 55.50. What does that set up potentially? 85% probability to take out yesterday's high. This is our next target, and it's not a recommendation. So, based on this, and there's more, grab your pen now. We are opening, now let's go to Bookmap. This is all done before the open. If you're not putting a plan together, and I always suggest checklists, things to keep you process oriented. Because if you're just walking in here and just kind of haphazardly looking at this, mentally you will not be in alignment. So there's like a checklist. A pilot, would you want a pilot who just jumps in the seat and says, let's go? Or would you want your pilot going, okay, let's go over the manual, let's go over the checklist, let's make sure the flaps are in the right position, let's make sure we got clearance, let's have our altimeter and all this jazz, adjusted. Are we ready to roll? Literally. So, ETH low, over 90% probability we take out either the ETH high or low. Overnight volume point of control, ETH retail price. Yesterday's volume point of control, this is the shopping experience. So yesterday, the highest volume was here, 49. And in the ETH, the highest volume is here. What does it say? Let's talk language. This is the fair price. Now, if the market opens lower, and there's another piece I got to go into here. Yesterday's value area low. So we're opening, now there's the retail price, inside of yesterday's range, inside of value. You see in a moment why this is important. And this is the fair price. Oh, it's on sale. Well, what do we know? Now, this is, again, pre-RTH. The ETH low tested yesterday's value area low. I'm in value. And if I'm in value, the potential is to come here. So I know maybe I'm going to be looking for longs. And there's more. Yes, there's more. There is. We have over 90% probability of taking out either the ETH high or low. We have a 90% probability of taking out the first hour's high and low. And 85% probability of taking out yesterday's high. And there's that 24. Now, let me take you back here real quick so you see where these levels are. 55.50 retail price. We're opening inside of range, inside of value. Where have we been going? Higher. What's been happening in here? Value is moving higher. Value is where the volume is. Remember the shopping experience. Too low. It's on sale. Oh, I like that price. Can't buy it here anymore, Tom. Okay, well, what about over here? Too low. What about here? Retail. And what about here? The same. Balance. Trend up. Next target. What is happening here? You'll notice higher lows, higher lows. Tried to give it a sell yesterday. Tail. Do you want to be long or short, Lewis? Here's some more statistics. We opened lower inside of yesterday's range. Now, this is a checklist or a grid sheet. If we open in range and value, the market is in balance. What does it mean? You got to trade the outside edges. It's mean reversion. Sentiment has not changed. The market has opened in value, and until it does, we expect two-sided trading reversion to the mean. However, just to keep you a little delirious, what's the probability of that yesterday's high? 85%. What's the probability of getting to the ETH volume point of control? Let me show you statistics now. In this configuration, and you have to vet these for yourself, you'll find this interesting. Getting to this, the previous retail price in this configuration, and this is not a recommendation, remember you got to vet all this and it's all random, is a 70% probability. Getting here, the ETH volume point of control, which is the same price, is an 83% probability. You guys with me? Getting to the first hour's high is a 69% probability. And what do we know about the trend? North. Now, this is Trader Lab, this is process, this is trade plan, and if you don't have this laid out, you're gambling, and I hope you have a great time, but the goal here is to create sustainability and an understanding of market mechanics. How does the market work? Why does it do what it does? And of course, it's random. Write that down. If you're into confirmation and certainty, wrong business. We have to solve for randomness, different objective. And the comparison is a successful business model. We already have it. It's called gaming, or the way casinos operate. Everything is random in the casino. Everything except how the dealer deals the cards. They play games that have an edge. Isn't that true? Well, what are you doing here? Are you playing trades that have an edge, or are you just impulsing in and playing a video game? I suggest you use a successful business model and accept the random outcome like the casinos do. They pay the gamblers. Why won't you pay the other participants? Just because you don't want to. Well, if you're in a business, we got to pay bills. We all have overhead and cost of production. Yet psychologically, we're looking to get much more out of the market than it can give us. It can't give us approval. It can't tell us we're smart. And it won't reward us by doing what most other retail traders do who fail in the business. Just a thought. How about this? Write this down. Think like a retail trader. Don't act like one. What do they do? What are you doing? Are you doing what they do? Is that a good idea? I don't know. Okay, what do we know? RTH open. Oh, I got to turn these off. Hold on a second. One moment. If you have questions, post them, and I hope you're getting something out of this. Please give a like. It supports the channel, and it's one of those things where if the channel is not supported, it won't continue. So I'm always asking that you return the favor, of this stream. Okay. So market opens. Let's watch. Now, the question becomes, how do we navigate a market where the fair price is here? For me, the first trades and the only trades today have been long only. There have been opportunities for shorts if you're a counter trend trader. Me, not so much. I'm interested in the broad strokes because I find my risk is constant. Now, I'm only talking about me. I'm not saying this is what anybody should do. I just talking kind of about my thing. My thing is, if I know I have a 70% probability to get there and an 83% probability, whatever it is, still to come up in this area, why would I be selling this? Wouldn't I be thinking about reversion trading? And it's called mean reversion. Let's try to find this. So liquidity is here. I get my sellers. So right here, no clue, except I see the liquidity and I don't know. And I have liquidity here. So let's watch the liquidity, the order flow, and let's try to put some pieces together. Remember, context, trend is up, targets are above us, 85% probability to take out yesterday's high. I don't know about you, but I'm inclined to lean there. What do you think? So how do I get long? Let's look. I got to look at my trades here. Hold on a second. I got to get back. Hold on. I'm gonna, because I can't, what happens to me is I forget where I trade because that's like a long time ago. And it really, really was. Okay. Let me find it. 8:30. Okay. Now I'm only talking about my trades that I took, and I'm not, I'm just like you. I don't, there's tons of slop. And who knows? Okay. So market, RTH open, market comes down. So I have my sellers here and my buyers jump right in. Right here, I have something called VPOC migration. And this is really something I developed many years ago. And when I first started observing it, and this is, gee whiz, I don't know, 2000, maybe even somewhere in there. But we didn't have volume back then, I don't think. I can't remember anymore. We had POCs, regular market profile, which is time-based. So I would observe this thing jumping around, and it wasn't sensitive like what we have now. Whoop, sorry. So let's look at this. Now, this is called trading in fractals. And what this is, as you guys think of multiple time frames, time is not an element in this. Structure and volume, right? So let's look at this. Sellers are here, going to zero, right? I mean, it's the open. What are you going to do with this? And now I get my buyers. No clue. Buyers are above the sellers. This is a reversal, right? And you're going, well, that's brilliant. Yeah, no, I don't know it's a reversal until it is, right? So what do I know? Let's look. What I know is I had icebergs taking the other side of the stops, and that doesn't mean the market's going to do anything. It just means, well, that's nice. And there's my seller. Now here, my buyers get above my seller. The volume in this, let me show you this. Now, I'm showing you concepts, okay? And what I'm showing you is something that can be extrapolated and used in any fractal or time frame. What all this is not complicated. This is shopping. You guys shop, you know. This is a store, convenience store. And down here, the tuna, they had it was a clearance sale, and they were selling the tuna at this price. The buyers came for the tuna, and this price becomes too low when I break above it, and I hold it. Now, in the developing daily time frame, going up in quote time frame, and again, time is not part of this, this is the retail price. So in a fractal, in this little store, too low, then where's retail in the whole day so far? It's here. So if I perceive too low, I can come back to the next time frame or fractal higher, which is here. Now, there's more. And you're going, really? Yeah, there is. I got to find it again. 40. Yeah, this. Notice this is in the book. So when I'm sitting here looking for my long, which is there, right? You do see this every day, right? Where am I trying to go? If I get long here, I have to scale there. That's called mean reversion. One moment. So this is laying out in the book. Now, 40. So I'm looking at this and I'm going, okay, long, this is mean reversion. That's the mean. And what is this? This is the mean in the fractal. So I'm trading back to this store. If it's too low, I'm going to come back to the retail price in the next higher time frame. If I come across here, now let's go a little further. What's in this leg? Remember, the market goes up to go down. The market goes down to go up, right? The market goes up to go down. The market goes down to go up. Watch. This right here is an obstacle. Why? Resting liquidity. And if I look over here in the limit order book, which is what you guys ought to be doing, assuming you have a dome, and I think everybody has one at this point, or if you have Bookmap, which is really, if you want to use order flow, it's not that there's an order here. It's what happens as we approach it. And what do I see? I see selling icebergs. This is stop an iceberg detector, and only one stop. Now, you guys, indicator world, I don't use any indicators. So I'm kind of put myself in a situation where I wanted more timely information so I could respond quicker. So I know when I come up here that this seller is sitting out here, and it's also possible that it'll front run or it won't, and we could go through. Isn't it wonderful? Gee, I want to be a trader, but I can't predict anything, but I can anticipate behavior. So the idea of being a trader is not making it up as you go, but having developed an understanding of market mechanics. If we get long wherever it was, and I come out here, what is in this leg? Aren't there stops? Market goes right down to go up. Market goes up to go down. So then I can come back here to the mean, or maybe not. Maybe only come outside, because now in the microstructure, that's the mean. So let's see what happens. Mean, and where's resistance? It's right there and there. So this volume here, what happened here is the buyers are here, the sellers are there, no way to know, and the buyers are here. When the sellers get below the buyers, it tells you get out of dodge or counter rotation subject to your time frame. See the behavior? Where did we come? Right there. This is a fractal. So subject to how you develop your plan, you would do the following. You would ignore this because your stop is under the low of the day and you have an 85% probability of taking out yesterday's high. What do you think? Is that worth going for? There. And the ETH high has about a 90% probability. Is it worth going for that? Maybe. So what's your time frame? So this could be an exit, and then you're going to trade rotations, or you just sit back in your Barca lounger and you're just hanging out. Here we come back here. Selling icebergs. What did we have here? Selling icebergs, selling icebergs. Right here, we have to clear this. And I think I was mentioning stop divergence to you. 7-4. Who's buying this? Is it initiative buyers or is it shorts being squeezed? Well, when you have this, it suggests the potential underline, because that's all you got, that we're going to counter rotate. What happens up here? 50, 100 sell icebergs. That's who's sitting here. Limit order book. What's the stops? 7 sellers, 18 more 4. What does that suggest? Right here, if I don't get above here, counter rotation, and it can do anything. Liquidity comes back in. See it? So, can you use order flow, and can you read the auction and understand what might happen? Not what will happen. We don't get that for trading, but we can understand what might happen and where. That's how you anticipate. Now, the other part of this is your plan already exists. When this happens, you know what you will do. Do you know what you will do? And if you don't, then you don't have a plan, and you need a trade management process that aligns with your psychology. Some traders are going to hang out and their stop's going to be down here, and they're going to, if we rotate, we can come down and rotate around. That's called mean reversion. I haven't had a short all day, and of course I don't trade when I stream. Been there, done that. I prefer not to do that. So variable high volume node. Watch the process. Now, none of this is just lines on a chart and it's mechanical. It is not. If that worked, we'd all draw lines on our chart and we'd all have ATMs in the basement. Somehow that doesn't seem to work, does it? Where do we come? Back to the resistance. Where's my support? Isn't it here? And where? There. Variable high volume node. Where does this come from? Here. What do I know? Too low? Too low? Too low? This is mean reversion. These are all longs. Outside, in, and this we got to get through to achieve our probabilities up above. Let's see what it does. Notice? Now, this is a long, this is a long, and this is your obstacle. Do you see something? Interesting. Now, this liquidity comes in here. Variable high volume node. This is the same trade as this. This is the same trade. Now, you're going, yeah, but it took this out. Yes, it did. What's under here? Stops. Where's our obstacle? There. If you're trading long, did you ignore this? Well, for me, there's a couple ways to trade this, and this is not a recommendation. If I'm getting long here, I got to scale there. And then I got to clear this. If I get a sell trigger, I can exit the trade, and then I'm looking at it's still balanced or mean reversion. Remember, at the top of the stream, I was saying, what do we anticipate? Two-sided trade. However, even though we're anticipating rotational trading, the lean is to the north side at the time of these trades. Is everybody tracking? How we doing? Ben, it's right here in the stream. If you want to go back and showing the trades, that's it. And I don't show my trades because I'm trading other things. I've developed more advanced processes. And if I'm streaming, I'm not taking trades, but I'm going to explain them to you. So, yeah, I just don't do it because I don't think anybody should trade the way I trade. It's psychologically aligned. Other traders are going to be selling this, buying this. I mean, you can do that. I'm not a counter trend trader. I can be, but let me put it to you this way. My thing is alignment with what I call the advancing army. I understand the market rotates, so it goes up to go down. It goes down to go up. It goes up. Same thing. Down, goes down to go up, goes up to go down, goes down to go up. So if I think the trend is up, I'm only taking the longs. And if I take a trade and I get stopped out, which I do, I took one stop today. What are you going to do? If I come down here and I pick the stops, that's all this is. If you need to understand what's sitting under here. Sell stops. I had my buyers here and my buyers are here. Well, if I got to stop here, I'm going to get taken out. All right, put it back on. If I get taken out here, let's look at this. Location, stops, liquidity. Now let's look a little further. This is a long, and let me show you the entry. I think I got this one also. I got to go back and look. So, Ben, if you want to review trades every day, you need to do this. You need to come and watch the stream and then look at your tools and see what you have that can give you some alignment if that's your objective. And of course, if this process doesn't speak to you, it's like a language, and we got to learn a foreign language. I threw all the indicators away because there was too much randomness, and I found that I didn't have an edge, but I always had winning trades. So I was always trying to fix a defective process. I didn't understand that I'm in a gaming business, not a predictive or a confirmation business. It took me years because nobody ever talked to me about it. So the selling is here, and I get my buyer, and I'm still at my location. Remember, look, this is like real estate. Outside edge. Come here, and I get right here. I get my shot on goal, but my support is in here. Here's the high volume in the microstructure. It's right there. So for me, this is another long. And it is, come here, there. Let me draw the little box, which you see me do. So the sellers are here. The sellers are here. The breakout of this thing is actually here. So I just want to show you guys structure, and then I'm going to move on. So here I have absorption, no clue. Sellers are here, buyers are here. So when I'm coming down here, what I know is, why is this delta bubble sitting here, red bubble? Well, 51 stops and 54 icebergs. So the buyers are here and here, okay? Sellers are up here because they are, hold on, let me just look at this. Okay. Buyers are here, sellers are there. Once I break below the buyers, that's my resistance. I come up, sellers are here, sellers are still here, going to zero. See? Where are the buyers? Here. Where are the sellers? There. Where's my buyers? There, 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 there. Breakout. I come back. Where's my buyers? Are here. And where's my sellers? Here. I break out. I come back. Why does now the buyers come back in here? This is my entry. That's my entry. My stop is under here. And what do I know? I have shorts in this leg. And where am I going? Watch. Now, we have a sweep. Where's the next location? Liquidity. What is this? Potential support now. This suggests counter rotation. Where do we come? Back to the retail price. So for me, remember, 70% probability, and what's in the book? Liquidity. Another target. 83. And then there's more. VPOC. Here, let's come over here. And where are we trying to go? Over 90% probability to get here, and yesterday's value area high. If we get through here, we have the ETH high, and remember yesterday's high, 85% probability. That's as deep as this gets. Are you guys tracking? Questions? Fairfax, today is a mean reversion market long in alignment with an uptrend. So that's why rotations down are opportunities for getting long. Obstacles are opportunities for either trade management or you're further away from the rotations. That's, everybody kind of figures that out. So this is the next area. So and all this is posted in TraderLab, pre-open, and this is part of what I do in TraderLab. Now, they're not trade recommendations because if, a tweet comes out or somebody trips over the cord at the CME, everything can change. So that's why we narrate the market and we anticipate behavior. We can't predict it. So if I have statistics and I understand the condition of the market and I actually have a trade plan where I prepare, and then I would have on my trade preparation sheet, context, what is it? Up. Where are my key locations? Bing, bang, boom. Where, if we open lower, in range, in value, what is the condition? To balance, rotation. If the market gets below the overnight volume point of control and yesterday's retail price, oh, it's on sale somewhere, then I'm looking for it to come back to retail. What's the other part of that? What's too high? And then I can come back to retail. But what in the higher time frame do I know? As you remember from the top of the stream, that's my target. In a higher time frame, and it never has to get there. It's not my job. My job is to take my vetted trades that have an edge, put the trade on, follow my trade management process, and as they say, let the chips fall where they may. Kind of a hint in that, I think. Are you guys tracking? Do you have questions? Ben, this is not, trading is not mechanical. You don't buy an LVN, you got to have a plan. You don't have a plan, Ben, not going to work out. You have to know before you put a trade on that you have an edge. If you're buying LVNs and taking stops, then why would you do that? Because you don't have an edge then. So that trade does not have a statistical edge. So then maybe you can discover that trade doesn't have an edge and then you don't trade it. The thing about trading is not mechanical. The work to create sustainability and its work is data mining. And it's laborious, boring, nasty. Who wants to do it? Only the people and the traders who want to have the opportunity to stay in the business. Most of us just want to push the button, and we're making it up. Not you, Ben. I'm talking about us. So if anybody listening to this stream can't tell me or somebody else what the probability is of a specific trade that is aligned with a specific condition, then you're on your way out of the business. I hope I'm not being subtle. But that's the differential between those who can sustain themselves, or at least have an opportunity for that, which doesn't mean you will anyway, than those who do not have an edge or just playing a video game. I can assure you the video game players don't stay in the business. So let's not do that. Let's do what most retail traders don't do. If most retail traders, and what I have heard, over 90% fail, what are they doing? And do we want to do what they do, or maybe do the things that they're not willing to do? See? So those are the choices we make. We have control over ourselves. We do not have control over the market, the other participants, or being even right. What is right? Right is having a plan and executing it, developing the stomach and the emotional stability and discipline to just wait for your trade. And if you only have one trade, it doesn't matter, because if it has an edge and you can execute it, you will then be building a template to build out a business. The Trader Lab is about helping you understand the business, helping you define conditions or context, and then helping you develop structured trades that have an edge. The rest of the time, you're a tourist. If you can take one trade that I've shared, only one, and you shouldn't trade more than one, because it's a template to create a business model, a foundation piece. You don't need more than one trade that has an edge. If you learn what edge is and what it can do for you, you will not trade without an edge. If you want to trade without an edge and you accept you're in an environment where you don't have an edge, you'd go to the casino and be sure to get the cocktails and the ticket to the buffet. If you want to be a trader who has a business with sustainability, then I would suggest you separate the gambling from owning your own business potentially. And again, that doesn't mean it'll work for you. It doesn't mean you'll ever manage your psychology, which is another element. And the way you get to manage your emotional triggers, fight and flight and the rest of it, fear, which we all have, by the way, is statistics. If you don't have something tangible that says you have an edge, how will you ever have the courage to put a trade on when all you have is fear? Think about it. Because if you don't have tangibility, you only have emotionality. I think I made that word up. And if you only have emotion, that emotional trigger is to protect you from the saber-toothed tiger. And when you don't have anything other than how you feel about it, what is the feeling that's going to dominate you? Fear. So we go on the quest for certainty and confirmation because of our fear. But suppose there is no confirmation or certainty. The casinos don't have it. How can you achieve it? You can't, in my opinion. And I spent years, probably more than a decade, trying to solve for that. And I could never do it. I always had winning trades. That was not the problem. You see, anybody can have a winning trade. The key to this business is only take trades that have an edge. Losing traders have winning trades. Think about it. If losing traders have winning trades, so having a winning trade doesn't accomplish anything. Having an edge is what accomplishes something, because you're still going to have winning trades and you're going to still have losing trades. But if you actually execute the edge, same as the casinos, and you're detached from the outcome because you have no control, only on the control you have is what you do, why would you do anything different? That's a question for you to ponder. That's why Trader Lab exists, and that's why I agreed to do it. Been there, done that. What I could say is, let me just see if I can get this. Yeah, I only look for longs because of the higher time frame context, and we opened in range in value. Okay? Come to Trader Lab. William, yes, there is a list of statistics, probabilities. You can use the link in the bottom of YouTube. In fact, anybody who's visiting today, you have an open invitation to the Bookmap Discord Trader Lab community, and also all the additional education available in the Bookmap server. And there's absolutely no cost for it. You don't have to be a Bookmap subscriber now, ever, never. You know. However, the Trader Lab, I think, is rather unique, and I'm not saying this is right for anybody. It's just a way to organize information and potentially create a process where the odds favor you. Not the next trade, not the next 5 trades, but over a large sample size. So in the casinos, if they play blackjack and somebody walks out with a suitcase of cash, they don't change the game. They actually deal the next hand. We get emotionally attached. Oh, I took 2 losses. I'm not sure. I'm fearful, right? Which has nothing to do with the last trade. So I don't take the next trade, and that one goes 20 points. So now I'm in the emotional state is FOMO, and I gotta make it back, even though I didn't put the trade on. Now I'm taking trades that don't have an edge. Does this sound familiar? This is not what sustainable trading is. That's what emotional trading is, and that's what takes developing traders out of the business. Patience is a virtue. You've heard that? Well, in trading, patience actually is an asset, because the edge will show up, but you have to only trade, in my opinion, where you have an edge. And like I said, if you were sitting on the trade desk with me, and I used to mentor traders many years ago when I was on a desk, and I've been trading going on 46 years professionally and out here with you. I understand the business, and I'm not saying I've got all the answers, because there is no absolutes. There's only maybe. So if I understand my behavior, if I understand emotional triggers, fight and flight, the lunatic under the hood, the primal wiring, I have to build guardrails and process that allows me to acknowledge and accept the emotional triggers that are not in my interest. I call it Jekyll and Hyde. You heard the story of Dr. Jekyll and Hyde's a lunatic. Well, Hyde is our primal wiring. Stay away from the saber-toothed tiger. Look for certainty. Don't put a blindfold on and cross the street and see if you get hit by a bus. So we don't do that. But in trading, we're doing it. So instead, if you sat on a desk with me, and I kind of think of the Trader Lab like a virtual trade desk. I don't call trades, but I do challenge you to think. And I do ask you why you would do something if you think that's the right thing to do. And it's not punitive. It is to get traders to think. Why would we still be looking for longs, or would we be done with everything and be finished because we got high probabilities? Yet, where's the stops from the shorts that are in here? Here, 85% probability. Now, if you're a counter trend trader, you might sell this. This is a short trigger. Me, not so much. I'm not saying that's not a good trade. This could be the high of the century. Wheat comes out and, off we go. So how do you handle this? Well, buy sweep, liquidity, sellers are below the buyers. Just giving you a little something to think about. Buyers get above the sellers. This is your shootout at the OK Corral. Sellers get below the buyers again. And where's my resistance? It's right there. That's a potential short or, subject to your plan, an exit. You see? What's your plan? So if you're in Trader Lab, you're either letting this thing rotate and you're willing to lose your breakfast on your keyboard if it comes down and takes you out, or subject to your plan. And I'm going to ask you, what is your plan? You're out here and you're looking for continuation longs because of 85% probability there. So what is your plan? Are you staying through the counter rotations and risk it coming all the way back here and it could come out there? Or are you going to just sit and take some Dramamine? The answer needs to exist before you ask the question. Does that make sense? Yeah, William, if you want statistics, trade plans, and access to the library of webinars in the Trader Lab, just use the link down in the bottom of YouTube. Everybody is invited. You do have to verify your Discord username. That's the only thing. So it keeps the spammers and the phishing and whatever out. And by the way, if I drop out of Discord, guys, let me know. I'm just going to try to show guys. This is the Trader Lab. It's a group of like-minded traders who've come together to leverage their collective experience. This is an advanced process. Doesn't matter how long you've been trading. The fact that it's advanced doesn't mean complicated. It just means it's random like everything else in trading. So that doesn't change. But we all get hung up outside, we all get hung up on indicators because we're looking for certainty. I understand. Well, me too. And I spent years with trading systems and indicators. And, so this is the Trader Lab chat. I do a load of narration here. Pre-RTH checklist, contextual definitions, conditional statements. Get to it. You need to review the streams. Don't be passive. So this kind of stuff. So anyway, this is the posting that's going on. I do tons of posting, pre-market, over the weekend, location. Thanks for posting that. So this is the Trader Lab community, and it's a community of traders. And the key about Trader Lab is that this takes a lot of work to do data mining and, do the rest of it. And this is what the library of webinars, maybe if I can find it, there it is, looks like. And you guys should, if you come here, Ned, thanks again for curating this. Everybody, when you see Ned in the Trader Lab, you got to give him a hug. I don't know if he wants to be hugged, but he deserves a hug for what he contributes. And everybody else who contributes in Trader Lab, we need to support each other because it's only by being a community that works together that we can create the leverage to do more and to become more. This is the primer webinar. Got about 33,000 views. You might want to start with this. It's a broad stroke. It's about an hour. What's going on here? Then meet the Trader Lab. This is advanced trader education, data mining, research, development. That's the data lab, the Trader Lab. And then watch this one. I planned, I saw, I traded. There's a few more. Why most retail traders fail using indicators. Are you trapped in Trader Groundhog Day? Trader Groundhog Day came up with that term because it was me. Everything I talk about is based on my experience because we all walk in the same shoes, by the way. And my experience was using indicators and time frames and trying to fix it and improve it, And I'd go back and look and say, well, gee, I would have caught this move. Let me adjust this oscillator or tweak this or that, all that kind of stuff. And then I'd look for that same trade again. And yeah, maybe it would show up. And I'd get my 20 points or whatever it was. But along the way, in spite of maybe catching that trade, I was still a loser because of all the other trades I was taking trying to catch that trade. When maybe eventually it shows up, but I had no edge. I didn't understand that. I was looking for repetitive behaviors, but I didn't understand statistics. Big difference. So I would see random behaviors, and the mind, we're very adept at seeing patterns, the brain. So we see patterns all over the place. But the fact that we have a pattern here and a structure, is this a short or is it an exit? Or am I just going to stay long? You need the answer. Not predicting what will happen. Understanding what might happen and understanding that our sellers are here and now they're coming back in the book. You see, that's order flow. How do I put these pieces together? Well, that's Trader Lab. And you can learn this, but you got to roll your sleeves up and be prepared to do something different than what you've been doing. Unless, of course, you are a consistently profitable trader, and then you come to Trader Lab and you help us get better. It's all about working together. It's not, there's no right way to trade. Except edge and randomness. Can you accept that you're in a 100% random environment 100% of the time? If you can accept that and let go of this thing about knowing what's going to happen and seeking confirmation. If the casinos couldn't figure it out, and they're a lot better at it than we are, how can you expect to get an answer that they haven't gotten? So then maybe you need to look in a different place for the answers. And the answers are going to need to be aligned with your psychology. So that's the other piece. We have traders in Trader Lab that'll sell this and go for this. Me, not so much. And it doesn't mean the market won't come down here. It's just not my trade and take out the low of the day. Sure, it can do that. You know that. But for me, this is a exit. For some traders, it's a short. Can you see the difference? Ned, are you in the Trader Lab there? And how we doing in YouTube, guys? Please give a like. Supports the stream. Since there's no cost, there is no accounting, if you will, to trader interest. And the only way Bookmap can tell if you guys are interested in this continuing is that if you give it a like. Because they go, oh, somebody likes it, huh? Okay. Are you guys learning something here? That's what I need to know. And it's not that you come here and watch the stream. It's that you come here and learn something different. And then you maybe start doing something different. Where's my resistance? It's right there. High volume. Let's come back to the shopping experience. Where's my volume? It's right there. So what happened here? Sellers are here, buyers are here, sellers are there, and liquidity. Ding, 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 sweep, seller, test. I'm not paying that. Hasta la vista. Now what? Well, if this is too high, and I've got my buyers currently over here, no clue, then this is resistance. That's what I know. Now, subject to time frame or fractal, you're hanging out, or you got out here, and now you're done with your trade. Me, not so much, and this is not a recommendation. 85% probability, not a recommendation. And this, in the intermediate time frame, is the target. And who knows, right? It's not our job to predict what will happen. Where are we? We're above this location. What are we doing here? We're above the retail price from yesterday. What is the market doing? It's trying to figure out what is too high. And if it finds too high, which was this, and previously was that, I'm over this, My next target is this. And no idea, not material. What is material is what is the market doing? Where is the current retail price? I'm above it. Higher time frame, retail price. If we get through here, up there. Not on my list of concern. Doesn't matter to me. What matters is trading the auction, leaning north until it changes. You see? So this is and look at this. Yesterday, what happened? We didn't take out the previous day's low. We sold off, and then the buyers came for it. Higher low, closed high, tail, squeeze, like a watermelon seed. You know what I mean? Watermelon. Are you guys tracking? Are you getting something from this? Please give a like. So you could trade anything here. You could trade the short here, but you're counter trend. Do you have a counter trend plan? I'm going to tell you, for me, well, let me put it to you this way. The edge is something you have to define. If this was a downtrend, as we define it, and we came outside, would you sell this? Well, if it's an uptrend and we come outside, knowing what we know, would you buy it if it's an uptrend? If it's a downtrend, would you sell this? And if it's an uptrend, would you buy that? If it's an uptrend, would you just use this for trade management but not sell it? Because in an uptrend, this does not have an edge compared to using this process in an uptrend, which has edge, because the higher time frame, who we'd like to align with, is moving the ball north. So what do? Do I play a video game and get on the weak side? Or with yesterday's high sitting here, do I actually sell this and take shorts? Or do I only take longs going here? Is this only trade management, but not a short? Do you know the answers? You need to know the answers. And you need to know what you'll do before it happens. That's what a trade plan is. Not predicting, just following a process that you've done the work that you know has an edge. And the outcome of any specific interaction is always random. So we got to get over it. Write that down. 100% random, 100% of the time. Each moment in the market is unique. What is going to happen? No clue. So why worry about it? You can worry all you want. How does that work for you? Probably not so good. So instead, it is not worrying because it's random. You're always going to be in doubt because there's no certainty. So if we can accept uncertainty, our job then is only to get involved when we have the stars aligned and we know we have an edge. Why would I short this? No. Would you? Hope not, unless you have an edge to go from there to there. But you know what? Where's the better trade? Wouldn't it be continuation longs if this is vetted? What do we have here? Now, this is a liquidity trade, order flow trade, and I don't go into too many of these. It's advanced, but we can always talk about them. But if you remember at the top of the stream, you need one trade. If you have an edge on one trade and you do the work, you now have built the foundation to build a business. If you take 5 structured trades and you're playing a mechanical video game, you're on your way out the door. It just hasn't hit you in the butt yet. You have to decide. Do you want to be in this business? I mean it. It's a decision. If it's a decision, you got to hold yourself to the decision and throw away the toys and basically start a business, understand it, find out why it isn't what you think it is. It might be something different. And again, it may be not. And you have to relate to it. And it has to become truth for you. It's truth for me. It may not be your truth. Doesn't have to be. And I'm sure there's other ways to accomplish, how to trade, right? There's not one way. But if you don't understand how to get in alignment, is it reasonable to anticipate a different outcome? Where are we trying to go? 85% probability, not a recommendation. Are you guys tracking? It's Trader Lab. Athenix, did I answer that question for you? How we doing in YouTube? Please give a like if you like this. Encourage me to continue doing it. And let's encourage the Trader Lab to continue being, I think, one of the most professional communities out there. It's not romper room. This is serious stuff. We got to work together, all of us, because of the data mining and the research that is done on developing new structured trades. I'm continually doing research. I continually do random replays. I've been doing it that way forever because I'm a competitor and this is a performance sport, if you want to equate it that way. So I have to perform the best I can, and that's intentional practice. Think about musicians. We've used this. There's the musicians who practice a couple hours, a week, and maybe they're hobbyists, and that's fine. And then there's the pros. They practice every day. Who do you think is the better musician? Or you're on a sports team. Do you just play golf, a couple of weeks or once a month or even once a week? Or are you out there practicing, getting coached and practicing your specific shots that you need to statistically improve? How do you approach this? Well, you're competing against other traders who are serious about the business. And then you're also interacting with other retail traders who unfortunately don't have an understanding of what they're trying to do. So most of the time we're interacting with other retail traders because of the short rotations and the stops. We're the guys with the stops, The higher time frame moves the market, but we're not trading against them. We're trying to get aligned with them so they carry our trade. The shorts that are in the market are potentially going to cover on counter rotations. Those are our buyers. The weak longs are in the market and they get taken out. Notice where we came, by the way. Where did this come from, you're asking? How did you know? Let me answer the question very specifically. No clue. What do I know? This is resistance. There's the line. There's the high volume. What else do I know? This is order flow. Liquidity came back in here. What does that tell me? Resistance. Can you see it? Now, I can't tell you what will happen. When I was sitting on a trade desk and I was, what I was doing is mentoring traders. And by the way, if you're on a trade desk with me, you might not enjoy it because there's no nonsense in this business. If somebody turned up late, they got sent home. I can understand where you might think, oh, that's just terrible. This is a business of responsibility, and you have to have the same approach with yourself as far as accountability. Are you accountable to anybody or anything? I'm putting on levels now. You're going to see levels show up that reflect the auction, and all they are high volume and low volume nodes. They should show up anyway. We'll see. I don't know where they are. They're going to show up. Yep. Don't know where they are. There they are. So these green lines are high volume. And all they do is I look at these as stores, remember? Retail price is here. What about out here? The retail price is there. What about up here? This is the retail price is here. This is the highest volume for the day. You see how this works? I'm not paying that. Yeah, but it's on sale. Retail. This is the previous retail price. We are above it. That means now the shoppers are willing to pay more for their tuna. So if I rotate back here, out here somewhere, I might find too low. And then it's mean reversion. And just to throw a little curveball at you. And this is what thinking in fractals is all about, or multiple time frames. This is the mean, high volume. It's called the mean. And we can rotate around it, okay? Because we are always reverting to the mean. But now, just to give you something to think about, what is this? Isn't this high volume in a higher time frame? Is it possible that we are reverting to the mean? If that's the mean, so in a different time frame or fractal, that's why this is a target. Reversion. In the developing time frame, intraday, what is this? Outside in. Reversion. When I get to the microstructures, what is this? Reversion. It's all the same. This is auction. The auction market theory that I've heard about, it happens in all fractals and time frames. So if I'm oriented towards the higher time frame, because that's the dominant force right now, I can use microstructures, which are the same from any direction in any location. Does that make sense? This is the auction. This is how the market works. In a random way, of course, just to keep you from falling asleep. Are you guys tracking? Please give a like. And use the link in the bottom of YouTube. Verify your Discord email so we know you're not a spamulator. And come to the Trader Lab. There's no cost for it. Use the resources. There's a document section. There's a library of webinars that I show you. All you got to do is verify that you're not a spammer, which means your Discord user email needs to be confirmed. And there's no cost for Trader Lab or the Bookmap ecosystem. There's a lot of additional education, large cap, small cap stocks, order flow with a high tier tool like Bookmap, options, mechanics, you might say, swing trading, market maker behavior, algorithmic, and on and on and on and on. How much of this do you need? How about this? If you don't understand how the market works, you're probably not going to need any of it. It starts with an understanding of how the market works. And most of us depend on our indicators to tell us or define how the market works. Have you ever thought that the indicator is just the tail of the dog and that the market is wagging? The dog wags the tail or the indicator does not wag the dog. If you understand how the market works, then you might be able to deploy indicators that support your understanding of how the market works. It's not the other way around. Can you see why maybe longs only today so far? Subject to change, not a recommendation. And can you see in the fractals or shorter time frames that this is the same process from the other side? And I'm using a combination of order flow, sweeps, location, volume. This is the auction. Check the volume. I'm not paying that. Leave the store. However, in a higher time frame, what do we know? This is too low. See, fractals makes you crazy, I know. And this is resistance. If the buyers can get through here, and what are these guys? Sellers. And right now, they're the passive side. And the aggressors, which are the buyers, are being consumed by the passive side. Not enough mojo to take them out. With an 85% probability, if I can get enough shorts in these down legs, and the stops are going to be there, at some point, these sellers, if the buyers can get through these guys or they pull, who knows, then here, because there's fuel up here, stops. Is everybody tracking? That's the if this, then that, if not, then what? If this, then that, if not, then what? So here's a question. Do I want to take a short here to come back here? Because this is the mean. So here's what can happen. I'm going to tell you what can happen. And it's not a trade recommendation. If this is too high, I can come here. And we have a structured trade called the IBF. It's a mean reversion trade. And if we did come through here, then we're going to roll under here, and then I'd be looking for a long back to there and back to there and out the top. That's me. Not saying it's a good plan. So what do? Do you take this structured short with your stop here to come here and then down out here someplace? Or do you, I'm asking you the questions because you need the answers before this. Or do you use this as an exit? You do not take a short, and then since we think the trend might be up based on all the reasons and an 85% probability of taking yesterday's high out, not a recommendation, then do we only take longs? You need to know the answer before you have to ask the question. If you're going, what should I do? You don't have a plan. You got to have the answers before you walk into the market. You take it piece by piece. Right here, you'd be going, should I get out here? Or is my stop further outside and I'm going to add if it comes out here for mean reversion? Or does your plan say I get out here or here and then I step aside? Or does your plan say I get short here to come here and to take some of these longs out? What does the market do? The market goes up to go down. The market goes down to go up. The market goes up to go down. These are all longs, remember? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go into resistance to go up, and the market goes up to go down. You see? So if we understand that, then we know what might happen, and we need to anticipate what might happen, where it might happen, and then already know what we will do if it happens. Do you have the answer? Not to what will happen, but to what you will do. That's called the trade plan. So what is my plan? Well, my plan doesn't matter. What's your plan? Because that's the thing that will either keep you in the business or take you out of it. And most of us don't want to do the work for the plan. We just want to push the button and get the dopamine fix. Unfortunately, that's probably not sustainable. So let's watch this, not recommendations, and under here. So we're going to watch this, bracketing algo, and let's think about this. Where's my locations? Out here, right? And out in here, outside edge. I don't call trades. You don't. I take stops. You take stops. We're all together on the stoppage. Notice what's here. I got liquidity here. I've got the VWAP here. I've got the mid. What's here? Stops. Do I want to buy the mid? Well, up to you. Me? No. Might be the trade of the century. Tom, you should have bought the mid. Yeah, in hindsight, it'll be very clear. What do I want to do? This was the retail price from yesterday. This is my outside edge out here. So I'm looking for to come back here somewhere. So my problem becomes where? So let's watch. Whoops. Let's get back. So stops are under here. And my liquidity is coming in here. So I'm looking for an opportunity to participate. I don't call trades. You don't need to take my stop. Stop divergence, liquidity. Let me look a little further. This could be your long. I don't know. Not calling trades. I want to get this moved over so we can look at it. If you have questions, post them. I've got about 10 minutes here before they pull the plug on me. So stops are here, and there was a sweep here, and liquidity was in here. This liquidity has come back in. Those are order flow pieces that you might want to think about. When I say think about it, it's like you ponder these things. What does it mean? What does it mean? Buyers were here, and we know about this. This is your resistance here. This is called mean reversion. Now, I wouldn't necessarily be taking this trade. Doesn't matter. I mean, I could read this, but how do I enter this thing? I don't have any location here yet. This is interesting to me, and it's somewhere out here. Not a recommendation. Who's Lutnick? Lutnick. Oh, okay. Thanks. I thought you meant Sputnik or something. I was going, wait a minute. So this is VWAP mid. We can get mid buyers, of course. I don't like the mid because they're mechanical and everybody gets paid, right? For me, I like to see stops come out. Now we got 51 and some buying icebergs here. But now we got to see the rotation. This right here is the high volume. So if you get long here, you got to scale there. I'm just going to say that's called mean reversion. And then for this thing to go up, it's got to come across here. We don't come across here, we might come here. So in trade management, what you would be doing is if you took this trade, you got to scale there. Okay? That's the long if that's your trade. Okay? And this is your scale. If I can come across here, then we're coming back across these sellers because their buy stops are here. So with an 85% probability, remember my trades are only longs today, but I have to have, for me, where my locations are. And this is an outside edge right there, and then down here. So these are the outside edges for mean reversion. So I'm still kind of looking at this, and these are not trades. This could be the location of the month right here for longs if I get above there. So if you took this, absorption, buyers are above the seller. Sellers take a shot here. Buyers are above the sellers. This is your resistance. That's all I can tell you about it. I tend, and this is not a recommendation, I like to have more range because of slop. In other words, I can't enter here. I can enter, like here or right there. Stop under here. So this would be my entry. That's my scale. That's hard for me. Not that I can't do it, but I'm going to say is that's like by the time I get in, I run about a 3-point stop, and that's not a recommendation. So when I'm getting in, I have to be looking at my obstacle, and it's not at the location. It's like 1 or 2 ticks ahead of it. So this would be really a marginal thing. If it comes out here, now I've got 10-point range. That interests me a lot more because I can most likely have a better shot at getting risk neutral and then looking at this and maybe higher or not. Does that make sense, guys? Everybody? Please give that like, Sputnik. Yeah. How we doing? Don't forget to give a like if you're in YouTube. Support the channel. And more important, come to the Trader Lab. I don't know where else you can get something like this at no cost. And as long as Bookmap is offering it, you might want to, as they say, think about that. And it doesn't mean you'll be a successful trader. Nothing can assure you of that. Only you. Because it is up to you. So now we're rotating down. Let's keep an eye on this, right? Remember, If you took a long, this is your obstacle. Can you see why? If this is the shopping experience, where might the better location be? Well, it's not a recommendation, but outside edge. So let's watch. Are you guys with me? Use the link in the bottom of YouTube if you want to visit the Trader Lab. It's open to everybody. Doesn't matter how long you've been trading. But this is about the business of trading, and, you know, I can't sugarcoat it for you. You actually have to roll your sleeves up and say, hey, I want my own business. I'd like to create financial independence. What does it take to do this? And is it just going to be some indicator? And I'm going to plug it in, and now I have an ATM in the basement. By the way, if you do that, let me know how that works out, and call me if you figure that out. Here's our location. And I don't call trades. Let's watch. Let's watch. We have a sweep. This is our resistance. We need to come above it. And this is our outside edge. So we just now want to see what happens. Not recommendation. Just follow the yellow brick road. Sweep, looking for upside rotation. This is important. If we can get above it, it might get interesting. If not, we can still come further outside. This is the auction. And remember what we're trying to do here. Unless something changes, we're coming back still here, mean reversion. I'm sorry, there. Lost my place. So we're trying to come there. Outside in, mean reversion, underlining the mean. Let's see if we can get it. I don't call trades. This is not a trade calling room. I take stops. You take stops. Welcome to the Stopateria. Everybody pays overhead and cost of production. Everybody. This is important here. So we had a sweep. We have absorption here. Right here is microstructure right here. It's not a recommendation. The hardest thing with this is catching the outside edge. It's like catching a falling anvil. So we don't know where it is. So that's where location and vetted structured trades come in. And the market can always do anything, right? So what do we know? Why is the market going up over here? You're asking me, and I'm going, well, it's because our buyers are here. Sellers are absorbed. The sellers are absorbed. The sellers are absorbed. And where are we trying to go? There. Is everybody tracking? You getting something out of this? This is Trader Lab, and you're all invited. This is called mean reversion. Hope you got something out of today. Don't forget to like. Come to Trader Lab. Just confirm your email down there in YouTube. You got to confirm it. If you're a Bookmap subscriber, confirm with your license key. If you're a TOS user, same thing. And if you're none of the above, there's a free registration there. It doesn't cost you anything. You won't be solicited, not a Zippo. And then you have access to all the advanced education in the Trader Lab and also the additional education in the Bookmap ecosystem. Thanks again, guys. Please give a like on the way out, and I look forward to seeing you tomorrow. If you don't have a plan, come to Trader Lab. Let's work on it together. Take care.